Welcome back. You're still watching Business Morning on Channels Television, and the Central Bank is holding an emergency meeting in the nation's capital, Abuja, with bank CEOs and treasury managers to decide the fate of the naira and foreign reserves. A lot, of course, is going to be hopefully coming up from that meeting. But joining me now to share his thoughts on this is Ayo Akinwumi, Head of Research at FSDH Merchant Bank. Good morning, Ayo.
Yeah, good morning. Thank you for having me.
Now, how much of today's meeting do you know about, and do you think the meeting is necessary in view of the performance in the naira in recent times?
Thank you very much. First and foremost, I need to quickly clarify that the meeting that is going to take place today between the Central Bank governor and the treasurers only. And the agenda of the meeting is not known. There are speculations in the market that it is possible that the Central Bank governor will discuss FX management strategies that they have put in place in the short term to manage the volatility that we've seen in that market. But we do not know exactly what is going to be discussed at that meeting. But if people are saying market watchers and operators are discussing about FX, and in view of what has happened to the economy, there seems to be pressure at the foreign exchange market, and there are there's a perception that possibly the current exchange rate is not at its equilibrium, and therefore there is a room for either a further devaluation or a depreciation.
But if that happens, what will the likely effect be on the economy?
Well, for an economy that depends only on one product as a source of foreign inflows, the sustainability, the ability of the Central Bank to continue to sustain the exchange rate depends largely on the price of that commodity that brings inflows, foreign exchange inflows into the country. What the Central Bank has done is to put in some little measures in place, and if this meeting today will be centered on discussing FX, it will likely be like a moral suasion, which the Central Bank will discuss with the treasurers that, wait a minute, this is what we are doing, and this is a necessary measure at a particular time. The devaluation, as we say at this particular time, may not necessarily be good for the economy. But there may not be, there's limited option than to allow the naira to slide a little bit further from the current level. But that's not actually and of course, like I said, if that happens, what will happen is that nominally we're going to get more money as a nation from the inflows of the dollars from oil to the country. But what it happens also is that all the imported things that we buy in the country, the prices will go up. Now, we've been a bit lucky now as a nation in the last few months because the global commodity prices are on a downward trend. And that's why we've not really seen so much impact of the devaluation on the local prices in terms of imported inflation. But if another level of devaluation will make imported goods to be more expensive for the economy. But there is a personal dimension that the exchange rate at the current level, given where the oil price is, where the exchange rate is, and where the external reserve is not at its equilibrium, and therefore, when a commodity price is not at its equilibrium level, there may likely be a possibility of a downward movement, which is exchange rate moving from the current level to
Ayodele, please comment on this if you can. There's been speculations that this meeting is also not unconnected with the possibility of JP Morgan delisting Nigeria from its GBI EM at the end of the year. What do you think treasury managers and bank CEOs will be telling the CBN on this matter?
Okay, now it's again about perception. Now, speaking to FX dealers, and we need to be a bit very objective about this. Speaking to, market dealers, FX dealers in the market, Federal Bank has reassured them, has informed the market a number of times that they are able to meet every genuine demand, particularly from the foreign portfolio investors in the market who have bought treasury bills, bonds, or you have bought equities, who need to repatriate their funds after maturity or when they have sold and want to leave. Now, these people, when they are coming, they come in with a certificate of capital importation. Now, Central Bank, to a large extent, has been doing that. So when there is an information about the market is not liquid to enable foreign investors living, it is not real, and that's the reality of the matter. Central Bank changed the trading strategy for the interbank FX from the two-way quote to an order-based system, and what that does is to reduce speculative activities on FX. Now, yes, speculation is part of any market globally, but then at the current level we are in a very difficult situation. There are major source of foreign influence into the foreign exchange influence into the country, which account for over 70% of the foreign exchange influence, has dropped. The price has dropped. That oil has dropped by over 40% in the last 7 months. The Central Bank has had to come to develop strategies to temporarily manage these expectations. So, but if you move back to, and that's what I think is causing the whole of this. But there has not been any case whereby a foreign portfolio investor wants to leave the market after maturing obligations or after selling instruments, and they have not been able to leave the market. So it's about perception, and I guess that's why Central Bank, if the meeting will center on FX management, and that's what Central Bank will go to explain to the treasurers that we should speak as one to the international community. Don't send, an information that is not backed up with, data, or that is not authentic, that does not cause fear.
So, Ayo, in terms of not wanting to cause fear, we know that, given the current realities, the Central Bank of Nigeria has to continue to defend the Naira as much as possible. Now you're talking about the fact that a possible devaluation should not be in the cards for the CBN. But how should the problem of arbitrage be handled? If you can, comment on that in about 1 minute or less.
The current strategies the Central Bank has put in place to a large extent has removed speculative activities from the market. But like I mentioned earlier, speculation is one of the areas where banks or traders make money in any market. So that has reduced the income that banks make from foreign exchange market. Okay, and so, but the current strategy is necessary. Whether the exchange rate will appreciate or not is actually, Central Bank has limited options now. We are import-dependent economy. Until the structure of the economy is changed, we will not, these problems will still linger. But Central Bank is doing how to manage the situation within its ability at the current level.
Ayodele, thank you so much for sharing your perspectives with us on the program today. Ayodele Akinwumi is the head of research of FSDH Merchant Bank. We're keeping tabs on that story as the weekend starts. How will the markets be reacting to the central bank meeting, or the expectations of what the markets, expectations of what is going to be the outcome of the meeting between the Central Bank of Nigeria, bank CEOs and treasury managers on the fate of the Naira and, of course, dwindling foreign reserves. But that's it on today's edition of the program. I'm Harriet Agbeni. Have a profitable day and a great weekend.